is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Hi, Cathy. Thanks for joining.
Hi. Where are you located?
We're in Austin, Texas. How about you?
Oh, well, I'm kind of unusual in WorldTree. I'm actually in Canada, in British Columbia, but we are a US company. So Doug will be calling in from California, and we have team all over the US, Costa Rica, Mexico, Guatemala.
Cool. Yeah, no, we have a lot of Canadian companies coming through our program as well. So it's not unusual, but yeah, looking forward to it. I looked at what you guys are doing there. It looks pretty interesting. How'd you get into it?
Well, in my case, so I used to be so I have a PhD in anthropology, and then I moved to North America, the dot-com, everything, and got involved with computer software, sold my company in 2012, and started doing business consulting with companies committed to environmental change, and lots of different companies. But in 2015, I met Wendy Burton, who's the founder of WorldTree. A little 3-person company, really great tree, really great energy, but no business model, like none. So I worked with the team, and we redefined WorldTree. We created a completely new business model for the company. And when that started to take off, which it did very, very fast, I joined the company as a full-time staff member in 2016. Yeah.
That's great.
And since then, we've grown to 300 tree farms, 6,000 acres.
Hey, Doug, thanks for joining.
Good to meet you.
Good to meet you as well. Yeah,
Mm.
Cathy was just giving you a little bit of background about herself and the company. So it sounds like you're doing some good things there.
Well, we're working on it, that's for sure.
Cool. Well, I looked at the one pager you sent over, and you have a convertible note there as well. So I just was curious to learn more about where you guys are with it, and then about your fundraise. I'm glad to tell you about 10 Capital. Where would you like to start?
We could just take 2 minutes and give you an update where we are. Then we'd love to hear more about you and what you're up to and how we may be able to align our interests. So we're raising money at the parent company level, first time in a while. And it's to raise capital so we can scale. We're growing a number of things, both on the lumber side, as well as developing large projects to go with our eco-tree program. We've now got 6,000 acres planted and really ready to scale as we go from there. So we've raised about 2.5, maybe 2.6 million on a convertible note, and we'd like to close it at 4 million. So we'd like to close that out in sometime over the next 2 or 3, 4 months.
What kind of revenue do you guys have?
Anywhere from $2 to $5 million a year. Obviously, we haven't focused on the revenue part. We've focused on the scaling and the growth part. This year will be about 3 million in revenue, and next year we should be into the 5 million and then continuing to increase from there.
Okay. And that's just selling the hardwood trees. I read you were doing that, and that
Now,
sounded like that was your
actually
business model.
We've got $2 to $5 million in revenue. This year should be around 3 million. Next year, 5 million and up. The revenue comes from management fee for managing our eco-tree program. And when investors invest money, they pay for the trees as well as for us to run the program, manage it, market lumber, and so on. Unfortunately, we can't go into a factory and manufacture lumber. It takes 10 years to grow. And we're 2 years away from harvesting our first fields. So we do go out and purchase, harvest, and mill some small independent growers out there, 15, 20 acres. But we won't start to do our larger amounts until 2 years from now.
All right. So there's management fees, and then there's revenue from
Yeah.
selling the lumber itself.
Yeah. We've got about $300 million worth of lumber that's in the ground right now. So it's very rare that you get a company like ours, sort of between seed and Series A, that has that level of assets ready to perform. And we're kind of an anomaly when we look at it that way.
What's the valuation of your convertible note or
We
valuation
had a
cap?
yeah, we put a market cap at 35 million in, which our board and us thought was very fair and reasonable. It's high given where we're at, but it's when you have this value of assets already in place, it was
Ah.
difficult for us to do much lower than that. So, and also would love your thoughts about it because we're open to modifying that if we need to in the future.
Well, you eliminate a fair number of angel investors, which is usually who we're going to at this stage, because otherwise we're really going to venture or PE firms. And if you have that much in assets, you can probably make the case that some institution, family office will come in and put in money because you've got assets to back to collateralize it. You could take out revenue, you could have loans with that as a collateralization as well for some portion of the raise. If you want some venture funding, it seemed like there would need to be a venture component here as well. And I was curious why you're going after angels and family offices and VCs in this case.
We've spent the last couple of years in the institutional side raising project money for our large projects. So each large project that we develop is like a $20 million project.
Hmm.
And we've got some commitments to get those up and going and funded. And I tell you, I just, that there's so much risk aversion on the institutional side, meaning they don't want to be first. They don't want to invest in anything until there's offtake agreements for tens of millions of dollars worth of lumber, a host of things like that that have led us to think that we're still better off with the family office, venture, high net worth individual as opposed to institutions.
Where you found most traction so far in the initial raises?
Well, for us, the 2.5, I think we're at 2.6 million have come from our ecosystem, meaning people that know WorldTree, that have invested on the retail side and the EcoTree program. They've done that for several years. And then we have a couple of $500,000 investors into the convertible note, and then a number of 1 to 200,000, and then number of 50,000. But they're mostly all people that we've known or have known WorldTree in the past. This is our first, venturing out with, US Angels is our first sort of venturing out of our own ecosystem. And that's when John said, hey, we ought to talk with you.
So were you
If you
finding interest from angels or family offices? Which were more prevalent?
Well, again, with their own network, it's a mix of both. It's angels and family offices, mostly individuals. And we're just really newly into the phase of reaching out at the corporate level. US Angels was really one of our first key events, and we had about 9 or 10 people from that call want to follow on with another call. But I mean, those are early in the conversation stage.
Right. And would you characterize them as impact investors that were really coming in? Was it the impact or was it more the financial return? Or I know it's
Yeah,
always a mixture of both, but
yeah,
what was weighing here?
the people in our network are very much impact and return. People in John's network at US Angel, it was all return. I mean, I think we haven't spoken to them individually yet, but I think that was
Okay.
the bulk of it.
Yeah, no, impact's a great place to be. I find the challenge is aligning the impact that you have with the impact the investor wants to have. United Nations has like 16 different impacts you could be after, and those are very broad-based: education, poverty, wealth, water, et cetera. But, getting alignment was always the challenge in that, to make sure that you had a 1 out of 16th chance of connecting with the investor. There are
Yeah.
funds out there in this space that would be interested in this, I think, because it's environmental and it has what I would call a sustainable business model behind it. Some impact is they're really just a nonprofit. They have no way to make money except for taking donations, and investors are a little bit leery of those, even if they
Sure.
don't call it a nonprofit. Their business model kind of predicts that. Here, it looks like you have a good business model that you can actually make money, and you can actually collateralize it with the assets that you have, which are increasingly getting more valuable, of course. And then, of course, it has a great environmental impact as well with the sequestration and the fast growth, et cetera. So it seemed like a great opportunity for sure.
We think so.
So what we would do is go out to our network and emphasize the impact portion of it. One way I've done this in the past is instead of trying to find impact investors that align with us, I try to find angels and family offices that they like the financial side of it, but they appreciate there is an impact on the other side, and it doesn't have to exactly align with their interest in water or whatever. This is just a good benefit to society. You know, the old saying about angel investors is they want to have a little fun, do a little good, make a little money, and so we're check marking all the boxes for them, so to speak, with this because you got a great impact there as well. But if it's pure impact, I find that sometimes can be hard to get, complete alignment with all the investors in our network. But we would put it out there to our network. We take your deal and the deck and put it in a warm mailer, send it out to our network, build a list of initially interested people. And then we go out to those guys and invite them to hear you pitch in our online events. And then we do in-person roadshow events. We found Zoom is a great way to open the dialogue, but getting out in front and people directly really takes the conversation to the next level. And our next roadshow will be June 12th in Chicago. And then we'll be in Austin, July 11th. It will be in Dallas, August 22nd. And this is a 10 to 6 p.m. type event. You pitch, answer questions, have 2 hours of networking time throughout the day with the investors. So it's a great way to get out and meet with them. And then we have dinner events to close. Like I say, online is a great way to open the dialogue, but it's hard to pick up checks that way. And so we have to go and get people back together and dinner events to do that. So that's what we're working on. We're $3,000 a month for a 3-month commitment. That's a retainer model. We're not a broker. My background is I started 3 angel networks and back in 2006, 7, and 8, and then started this in 2009. Been doing this for 12 years, raised over $1 billion, and have found that brokers are not allowed in the deal by VC funds or angel groups, and we didn't want to lose our network, so to speak. So we went this way with it. We have a good impact network here in Austin that we go to, and then there's many, many around the country as well that would be appreciative as well. So we would go after the impact ones for sure to see how we could play with them. I don't know if you've already approached them or not, but we could do a reach out to them and make sure that's a component of the campaign.
Yeah. And let's see, what would you need from us early on if we decided we wanted to work together and get started?
We usually need the pitch deck. In this case, you've got the one pager. We could use that. Pitch deck could be a little bit more expansive. And then around it, we put the deal highlights, like the terms of the deal, short elevator pitch, call out some of these key value propositions, like the value of the trees in the ground, the value of the trees that are coming to harvest soon. But you do have to justify the $35 million. That's a bit of an outlier. But then the vast majority of startups don't have those level of assets either. So it's you have to kind of explain that to people up front.
Should have got a pitch deck on that first link, but we'll certainly have that sent to you. Make sure you've got directly the link to the.
Okay, sure. We can certainly use that. And of course, the pitch decks are always being updated. We always like to keep up with the latest one.
Yeah.
What was your question, Doug?
I was going to say, what typical kind of valuation or market cap that you see for a convertible note or people just on average? I know it varies, but on average, what would you say?
Well, given the revenue, you're kind of at the Series A level. So you would see $10, $15 million is what you see in most cases. Those are usually technology deals. Here, there's an impact component instead of a technology component, but still it has kind of some technology built into the tree itself, I would think. So that's why a lot of angel groups have rules about not investing over $10 or $15 million. Here you're at 35, but the value in the ground is. And there's this risk reward to that as well. That that's the current valuation today. Who knows what it will be 5 years from now, 10 years from now, when it really starts to come to harvest. So there is a risk reward component that people have to take on as well. But yeah, that's what we normally see.
Yeah. Okay. Fair enough. I just wanted to understand how much of an outlier we were. So I totally get it.
Right. So angel groups, some angel groups probably would not take it, but we would go with individual angels and family offices. Did you get any venture capital going after this in any way, shape, and form? I would not think so, but I'd be curious.
Yeah. I mean, again, we haven't looked at it for the corporate level. So this is really our first venture outside of our network.
You ever go after any ESG-based funds?
Not any funds, no.
Okay. There for a while, environmental social governance funds were all the rage. I think they've come down a little bit. I don't think all of them had great returns, but still there are some good ones out there that would be of interest in this that we could go after. So there might be something there for it. One thing I found is that what gets the impact investor excited is if you can show them an impact metric. For every dollar we make in revenue, we do X amount of good. For example, we can graduate 10 more students, and you can plug that into your financial model and then roll it up. And so at scale, it's a very substantial impact you're having if you can boil it down to a metric that fits into your current financials. Do you have an impact metric now in mind?
One of the biggest things is carbon, the carbon sequestered. As we scale, it's easy to measure. It's easy for an investor to see the difference that they make. So that's one of the simplest ones.
For every
Uh,
dollar of revenue you make, how much carbon are you sequestering?
don't know about every dollar of revenue we make, but if we scale the way we want to over the next 2 years, we'll offset the entire carbon footprint of San Francisco.
So what we want to do is somehow capture that. You
They
have to
can
really, because people say they're doing good, and then I dig into it, and well, they graduated 3 people last year. Well,
Yeah.
that's good, but that's not a lot of good. It's just a little bit of good. And
Yeah.
so we have to quantify it for people. And like I say, if you can map it back to a financial metrics, for every $10,000 revenue, we sequester 100 metric tons of carbon, whatever that might be.
Yeah.
So, or cubic tons, I guess, would be the number. But the idea is you want to get it back to, how much that is for San Francisco, how much that is to your revenue. Okay, that's X dollars. That's something that we can start to get a sense of what that is, and how and over time how big that can be as well. And
Yeah.
like I say, if I map it onto my five-year financial pro forma, then as you map out the pro forma and go forward with it, boom, there goes that there is included your impact metric. And that's where you want to be, is right next to the financial numbers, so to speak, not separate from it.
I've got a few questions. I'd like to just go through the different. 'Cause it sounds to me like you have like a number of different companies that you're representing on the Zoom calls, and then this roadshow, and then the dinner event. So for each step, so like an online event, how many companies are on there? How many attendees? If you could give me an idea of what that looks like.
So in the online events, like the Quick Pitch and Life Science Syndicate, we have 3 to 5 investors on the panel. You have 8 to 10 investors in the audience on average. We do 5 of these a month. One's a quick pitch for tech, one's the life science pitch, one's an AMA, Ask Me Anything, one's a hot topics, and one is a family office panel. So the idea is we have different formats and different structures, because sometimes you have content, it gets a different group, and so we do it that way. So those are the online events. The in-person event, we were just in the Bay Area. We had 50 to 60 people in the room, of which 35 to 40 were investors. And we had 3 rounds of pitches. We had 4 in the morning, 4 in the early afternoon, and 4 in the late afternoon. And people kind of came for different sections. They came to the morning, went to lunch, or they came to lunch, went to the first round, and they came to the third round, and then they stayed for happy hour. It's hard to get somebody there for all day, given other things going on. But we had a good turnout and always had 50 plus people in the room. And so we have 25 companies in the program. It goes down to 20, up to 30. And so we're always hovering in that range there. We don't go past 30. It's too many to cover, but that's what we're doing.
And at the dinner event, sort of the closing bit, is that just for how many companies participate?
That's just you. That's just your company. And we go back, and so if we came to our Bay Area pitch for May 15th, we would want to June 15th go back to the Bay Area, invite those who heard you pitch to come out for a dinner event. You either be a formal dinner with a private dining room, steakhouse type thing, or it's an informal dinner where we're just sitting out in the main lobby room with 6, 7 people around us, and we're just going through and giving them an update, explaining how it is, and just having dinner with people. Yeah, you can bring handouts, but usually by that time they kind of know what the deal is, and they're just trying to get their questions answered and see more about, well, if I join, what exactly am I joining here? So, and getting to know the people is a big part of that. And dinners work out really well with that.
Right.
Yeah.
Interesting. Cool. So the 3,000 a month just covers whatever activity is happening at that time, and we sort of meet with you to figure out which things are appropriate for us when.
Right. The 3K is the standard fee, covers everything. The only other cost is if we do have to pay for the food at the room. And some people opt for the $60 a head restaurant, that's fine. Or they want to go for the $5,000 steakhouse with all the great stuff. That's another option as well. And there's everything in between we can pick out. The key areas we find we do most of these are in Austin, Dallas, San Francisco, Bay Area, Chicago, New York City. Those are kind of our large concentrations, although we can do them anywhere else. We've done Seattle, we've done other Houston, other places also. It just depends on where the interest is.
Okay.
Excellent.
Well, what I can do is send you some details about how we work, campaign proposal. You guys can look at that. And if you have any questions, we can jump back on a Zoom. If you wanted to join, you put in the first payment. And then after that, we would set up an onboarding call the next day. And the goal is to get the intro mailer out in 1 week. Once you have the mailer out, it takes about a week to go through all the lists. And then you start pitching in our online events. And then we can do other things like come up with valuations to justify the valuation you have. We come up with other tools to, like, we would sit down and maybe work out your impact metric. How do we quantify it? How do we put it on the financial projection and make hay with that? Here's what we're going to do, because that's a big part of it. And figuring that out, it takes a little bit of work. We have to go do a little bit of math, a little bit of structuring, and figure out what we think we're actually doing out there. And they have to be able to look at that and see that, not just guess it, but we can see how a connection between your business and what you're doing and the impact you're making in the market. But of course, it's a big topic today, climate change. So I think you have a very interested audience in how you're doing it.
Yeah, great.
Very good. And then I have one more question at Hall. Do you notice any sort of seasonal variation in investor activity? For example, does it go quiet over the summer months or stay stable, or do you notice on that?
So if you're tied to the angel group world, they don't do a lot in December or July. If you're not tied to the angel group world, just about, individual angels are always looking at deals, and family offices are always looking at deals, and VCs are always looking at deals. So there's that aspect of it. So we run year round. We really don't do much the last 2 weeks of December. So anyone whose campaign goes over the last 2 weeks of December, we just give you 2 weeks on the end of your campaign to make up for that, because there's just no getting around it. But every other week of the year, we're at work doing something at some level.
All right.
Cool. Right.
All right. Well, I'll send it
Thanks
over
for
to you
saying
guys. Thanks so much for taking time, and we'll go
you
for
bet.
next steps. Thanks so much, and have a good day.
Okay. Thanks. Bye.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.